Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
If you're wondering what the economy is doing to CEOs, what difference Europe makes, and why we all need to be concerned and watching our finances closely, well, Francis Cianfrocca, he is CEO of Bayshore Networks, a network security company located in my home state, New York, and writes for a lot of different blogs, has great insights into the world financial system. Hey, Francis, welcome back.
Thank you. It's great to be back with you, Carrie.
Hey, it's good to have you back. It's been too long because I know when I talk to you, I'm going to learn stuff and think of things differently. So everything's been good? You're just sitting back watching things?
Well, we are, my company, we're in the cybersecurity division, and so one of the things, as you know, and there's some news this week about some new attacks, the world is getting to be a pretty dangerous place with regard to cybersecurity, so we've had no shortage of work to do. But I would say if you look at the macro picture, there are a lot of headwinds going on. And, of course, the situation in Europe is at the head of the list, but it's having a lot of impact in the rest of the world, China and the United States. And the situation economically, financially, and in terms of business conditions, I would say on balance has deteriorated pretty dramatically over the last month or so, and you certainly see that in the markets.
Yeah, but the government's telling us that we're in a recovery.
You remember recovery summer? I can't remember. I was thinking about that.
Green shoots, 2009, I guess it was. Or
yeah,
10?
the green shoots was 2009. I can't remember if recovery summer
was last year.
2010, right?
Or 11.
Tim Geithner and Barack Obama.
Yeah, I believe
getting out there. That worked really well.
Yeah, like all those people, 47 million people on food stamps, they believe it, right?
That is a remarkable statistic. And, of course, you talk to the people in the agriculture department, they see this as, one of the most important things. I mean, it's God's gift to economic stabilization for the people of America. And there is something to that point. It's an important program, an important support for people who are really out on a limb. But for them, who run the program, they see success in terms of increasing the number of what they call clients. Well, I think there's something wrong with that.
Do they get commissions or incentives like toaster ovens? Sign up 100 people this month and you get a toaster oven?
You're thinking like a businessman. Government doesn't work that way. They think in terms of their mission. They don't think in terms of making a profit.
Yeah. Well, it's distressing because obviously most of the people, I believe, who are getting it probably need it, although there's a lot of college students on student loans who qualify for food stamps because they have no income, but they're borrowing vast sums to support themselves through college.
Yeah.
And they just get it. And the other thing is that casinos around the country they're working on trying to ban them from receiving food stamps for their valuable services. And then, like in New York, I don't think you could buy sweet, sugary drinks anymore, but it's okay for fruit juices. So it's becoming a tool of governmental control over what you ingest and put into your body. And, the abuses are just legendary, like any other government program, because let's face it, the politicians really don't care if someone's getting it who shouldn't, because every recipient's a potential voter, right?
Yeah, and not only that, but if you look inside the program, they're run by professionals who take their work very seriously. And I have to say, I'm a capitalist. I'm very much a free market, free enterprise-oriented guy, obviously. But it's clear and it's obvious that if you're going to have a prosperous society where broadly shared prosperity, you have to have the social safety net. That's a basic obligation of society, but it's a real problem when government, which it does not is not subject to failure. That's what makes government different from business. Mm-hmm. They will just grow arbitrarily when given the chance, and for them to define their mission at higher and higher levels, reaching well up into the middle class, that is indicative of some major problems.
Yeah, big problems.
Keep the safety net where it is for the people that need it.
Yeah,
but to define an important part of just your basic, just basic middle class life as being due to or dependent on some level of government subsidies or handouts that's wrong. We're going in the wrong direction. I mean, it's a socialist direction.
Hey, what did Milton Friedman say? He said that unemployment insurance is the most successful government program ever created because it actually accomplished what its name stated. It ensures that there will be unemployment, because how many people don't take jobs because they're collecting, and all of a sudden you could be real choosy, or they just wait off to the end when the benefits are going to run out and then they get a job. So there's problems there as well. And the 99-week thing is about expiring now. So maybe unemployment will go down as a result. But the other thing, Francis, that's happening, and I don't know if you've caught this, is the administration, the government, is gaming it, because as people come off of unemployment, they go on to disability because they can't find a job. They're so depressed, and it's simple to get disability. You see those fellow members of the profession, often referred to as shysters, pushing, if you've been wrongfully denied disability benefits, call us up and we'll get you on the dole real quick.
Oh, that's remarkable. Yeah.
Binder and Binder. You have enough to worry about, right? And you see them, and all these disincentives to work. But getting away from that, like we're going to Europe now, where they've had these disincentives in place for many, many years, for generations. And where are we there now? Can the euro and can the EU possibly continue on in their present form?
Well, the most straightforward way to approach that is to look at the markets. And this week, we're taking out some very important lows. You look at the euro; it was trading around $1.23, between 23 and 24 earlier today. The Swiss National Bank is having a hell of a time defending their de facto peg at 120 on the euro. Price of crude oil, which responds to the economic outlook to a significant degree, below $90. Gold has been very weak. The dollar has been very strong. And one remarkable thing, the 10-year U.S. Treasury yield down to 165.
Remarkable.
I thought at the very, very bottom of the financial crisis, like in December and early January of December 2008, early January 2009, the lowest I ever saw that print was about 2%, and now it's at 165. That's absolutely remarkable, and that's telling you that huge amounts of the world's capital are looking for a safe haven, a place to park, a place to take themselves out of the game, to be on the sidelines, and wait for something to change. Now, in Europe, I think obviously a big chunk of the focus has moved from Greece to Spain and Italy this week. Greece, I think the conventional wisdom has been, a lot of stories last week about how they're going to leave the euro, and a lot of that is driven by near-term government funding requirements within Greece. Greece, of course, 50% government. That whole economy is government-driven. So when they don't have money, they can't pay. They can't pay the people who receive government checks, and so they've got a short-term funding crisis.
Bad news there.
It's bad news. But here's the thing: I think politically. My expectation, and this is based, I've felt this way pretty much since the last election, which was on May the 6th. The next election, you're going to see a change back. The far left party that won the most votes and was unable to form a government. These are the guys who are promising to end to stop austerity and to the euro, which means the expectation is you'll lose the euro, you'll go back to the drachma, and that's resulted in capital flight, et cetera, et cetera. But I think the Greek people are taking a closer look at those guys and saying, not the most attractive personalities, and we will my expectation, and I could be wrong, is that the next round of voting in Greece, you're going to see a move back to the center-right and center-left parties, which have been committed to austerity and to the euro. The focus, you look at the Spanish banking crisis and Italy, both of them have had really major problems this week floating new debt. And Italy, the 10-year rate, they just had a somewhat partially successful 10-year note auction, and they're paying over 6%. Well, this is 6% in euros for a 10-year note, and the U.S. 10-year note is 165. The German 10-year euro note is 127.
Yeah.
I mean, what this is telling you is the markets are anticipating major stresses ahead.
And deflation, because, look, because...
Yeah. Well, Europe is in recession now.
Yeah, we're going to see deflation. And I've come to this conclusion that we're going to see banks cease to operate, large-scale banks, because the bailouts can only go on for so long. I don't believe everybody is going to be bailed out. So they'll put them into receivership. They'll basically write off the creditors, not including the depositors, who are technically creditors but not trustee. Their money.
Yeah, well, they've got the FDIC, so it's something different.
But I'm talking Europe as well. And, and you're going to see the creditors and the shareholders wiped out, conservatorship and recapitalization of new banks, because what we're going to find out is there's no such thing as too big to fail, that if you're failing, no matter who is behind you, and you can't reverse course, which means you can't make assets that are worthless. You can't turn this excrement into gold. You can't do it because they have no value. You're going to see these entities fail. And I believe that they will be dismantled in, I wouldn't call it an orderly process, because MF Global was not an orderly process, but they're going to have to be dismantled because the cost of keeping them, maintaining them, and subsidizing them, it's just going to become unaffordable, and you get great resentments among the middle class and the ordinary populace when they see these people getting their bonuses and they see these huge entities that are being propped up, zombie banks, not making loans and doing nothing other than sucking up all the excess liquidity in the world. And that's going to happen to a point until it stops happening. Once all those loans get written off and liquidated, then the money supply is going to go down dramatically. And this is the vision that I'm starting to see. I was never a deflationist, but when you see loans and you see bank assets, just go to zero, then you have deflation, unless the government just steps in and prints all that money that got destroyed, and then there's no velocity of money taking place anymore.
Right. Yeah, so it's all risk aversion at that point.
Yeah.
I think that it's very hard to really game out the scenarios, and that is because there is one set of institutions, one set of entities that has a very large stake in the outcome and a tremendous amount of power to influence these outcomes. We're not talking, especially in Europe, to some degree here as well, but we're not really talking about market-determined outcomes. It's because of the governments, the sovereigns that are. This has been said many times, not a new idea, but if you look at all the risk that was originated by private sector entities, including banks, and here we've got the hedge funds and all the other stuff, very, very different kind of capital market structure. In Europe, it's largely dominated by banks, except in Italy, interestingly. But what has happened as a result of the financial crisis is that the people who run the governments in Europe really undertook to shift the risk. They're the backstop. They're the ultimate backstop behind all the private sector risk that happens in Europe, and that is where the risk has now gone, and that's why we're seeing this big split within the euro. The euro is being torn apart because on the one hand you've got Germany, which is paying 127 on it for a 10-year note, and then you got Italy, which is paying over 6%. So there's tremendous disparity in the perception of the creditworthiness of these sovereigns because everyone knows, there's no question that rather than let these banks fail messily, the sovereigns are going to step up and do what you're saying. And that is going to produce stresses within the euro because of the ECB. Mm-hmm. Now, one of the things that happened just today, the reason I've been told, I'm hearing this from more than one person, so there could be something to it. But the reason that markets were weak today in Europe is because a perception in Spain that the Spanish government has been trying to fund and refinance this bad bank, which is a roll-up of a whole bunch of bad retail banks. Bankia, exactly. Yeah, right. And the ECB apparently came out and poured cold water on this. Why? Because of something you just said a moment ago. The Spanish government is proposing to put all kinds of new capital into this entity to keep it from failing, and that is because Spain can't print their own money. They're on the euro. So that's going to produce enough demand within the capital markets to feed good money after bad. Mm-hmm. The investors aren't going to want to be feeding that pig. Yeah. Okay, because that's what it is, and that's going to have an impact on lending rates within Spain and put even more pressure on them. So, this puts you in a box. If the ECB is going to come in and say to the financial authorities in Spain, look, you're not going to bail those clowns out, then what's going to happen? All right, that's where we get at this point you're throwing it almost back to a market-oriented outcome where the markets are going to do something messy and disruptive to produce a failure of some kind in those entities. And that it's, as I say, your point is deflation is absolutely the case. What is deflation really? It's there's a lot of different ways to define deflation. To me, I'm a finance guy. Mm-hmm. I perceive deflation as times in which the desire on the part of private sector actors, that's businesses and individuals, to hold risk-free, liquid, short-term cash is elevated. Mm-hmm. That's absolutely where we are all around the world.
Absolutely.
Okay. The other way to look at deflation is the price of risk-bearing assets they become underpriced. Right. In other words, interest rates for risk-bearing assets become too high, and that ends up producing economic stagnation. Because it doesn't make any sense, right? You won't get paid back for taking risk. So people just don't undertake the economic investments that would produce innovation and that would produce job growth and that produce economic health. And you're left with government dependence, and that has been the norm. You said this already today for generations in Europe. In the United States, it has not been the norm. But I think about this a lot these days. I think that free enterprise is under attack in the U.S., and to shift gears a little bit here, I do lay that very much at the feet of the current administration because they're totally natural with this. They're perfectly fine with the idea of a government-driven economy. I won't say socialist, because they still have to win elections, right? But the way that they manage the economy, and this is happening in the Fed, in the Treasury, and in all the bureaucracies, the way that they extend rules and rulemaking to the financial industry is remarkable. And I can tell you, based on firsthand knowledge, we do business with a lot of big banks. I think this is underappreciated by people who aren't in the field. The amount of, we say too big to fail. They take that very seriously. All right. The large banks are government-controlled entities, and they are operationally, in terms of just the things that they do on a daily basis, the way they operate, are under tremendous amount of control by the federal authorities, much more than I think a lot of people realize. And this is new. This is just in the last 2-3 years.
Mm-hmm. Yep. Oh, there's no question that these too big to fails are basically branch offices of the federal government.
Yeah, they are.
Because they fail, then they're just I would call them movie sets. You know, you go in and you see like the old Western town, and here you see the ABC Bank, the XYZ Bank, and behind each facade is Uncle Sam.
Yeah, and it's the impact on the economy is less in the U.S. than it is in Europe because our capital markets are such that large businesses don't require banks to have access to capital. If you look at the big banks, last time I did this, just on the back of an envelope, you look at the large banks and even the regional banks, which are quite healthy on the whole. Community and regional banks, not the monsters, not the mega banks. They're doing okay. A lot of what they do is funding commercial real estate. Okay. And say what you will about residential real estate is still in the dumps, but people are still commercial real estate is bumping along. But we don't depend on banks to fund business activity that much in the U.S. at the large company level. What about small companies? They can't get access to credit. Why do you think we don't have job growth? Because small companies create most of the jobs.
Exactly.
Right? So I look at the Fed, and because of the regulation, hard regulations and soft regulations that they have over the large banks, they have perhaps an unappreciated amount of power, which they exercise every day of the week, to give banks a very strong incentive to buy U.S. Treasury debt in preference to other kinds of assets.
Mm-hmm. Oh, yeah.
That puts a floor under the price of U.S. Treasury debt, and it also means that it really alleviates the pressure or the fears of inflation. Okay, because inflation, the marker for that is going to be out of control interest rates, right? But as long as the big banks don't have to set aside any capital and they're undercapitalized, right? They don't have to put up any capital to borrow money or to lend money to the Treasury, so they keep doing it. And that makes it possible for the Treasury to not solve their fiscal problem. That's why we keep having deficits year after year, and they're sustainable, or they look sustainable. The cost of it, really, is you're going around the block to get to the same place, right, to get next door. Mm-hmm. We could have a major, massive inflation event that would destroy the value of savings and sink the economy. Instead, we're just preventing the economy from coming back in a strong way through this de facto forcing an overprice of risk-free securities, and that just means the economy doesn't have the capital to grow, so it doesn't.
Yeah, it squeezes out the marginal and less desirable.
Squeezes out risk-seeking and innovative activity.
Yeah, exactly.
That's what it does.
And that's where we're at now, and we got to get going, Francis. If people want to find out more about you, where should they go?
Well, I write at Red State quite a bit. It's such a challenge with work, but I also do a podcast twice a week called Coffee and Markets, and your listeners can check into that if they want. And I appreciate the plug.
Hey, excellent, and thanks for being with us. We'll talk to you again.
Looking forward to the next time, Kerry.
Absolutely.
All right.